buenos días.
Good morning,
Buenos
Christina
días.
Diaz.
Easy. How's everyone doing this morning?
Fantastic.
Great. Good.
That's awesome. We're gonna give a few more minutes. As usual, we wait like 3 or 4 minutes for more people to connect so we can start the class. Would that be okay, Ryan?
Absolutely.
Alrighty.
Thank
See
you,
you
Chris. Of
soon.
course.
Trying to find that graphic that Angela sent over that has our picture and all
So you
that.
can share your screen.
Yeah, I've got a PowerPoint I'm going to show everybody, but in the meantime,
Sure.
we can do this, and then I can do this, and I can do. That's okay. Back to Zoom. Oh. That's something different here. I don't like the way that was showing my desktop. Ah, there we go. Much better. So how's this going down there in South Florida, Christina?
Buenas tardes, señor presidente, honorable.
Sorry, Ryan. I was connecting my earpod. Can you hear me now?
Loud and clear.
Okay, perfect. It works. Well, South Florida is great as usual.
Absolutely. Did you guys get a lot of weather last weekend with that storm that was out there?
Well, fortunately, I was not in South Florida last week, so I didn't get to experience it. I was in Canada on vacation, so I had beautiful weather. I was very, very lucky.
Yeah, it's the time of year to be up north.
Yes, it was great. It was in Vancouver visiting some family,
Mhm.
so it was fun. Okay, so I think that we're ready to start, Angeles. What do you think? Are we ready?
Absolutely. Well, thank you everybody for being here, for taking the time to come to this amazing class. Like you know, Total Lending Concepts is we have a great partnership with the club. And Ryan, he's the senior loan officer and vice president of loan production manager. And vice president and loan production manager, which is an amazing position because he's such a support and he has so much knowledge in all of this loan world, and especially today. He's going to share with us some creative financing approaches to kind of help all the real estate agents that are dealing with buyers and everything that's been going on with the settlement, and give you some tools and some step-by-step on how to manage this and how to drive your buyer and talk to the buyer about this commission and making it happen so that seller is happy, buyer is happy, and agents, of course, with their commissions are happy. So thank you, Ryan, for being with us this morning. And please go ahead.
Great. Well, again, I appreciate you guys having me today. Again, my name's Ryan Needing. I've been in the mortgage industry for a little over 20 years now. Actually, we're coming up on 22 right now. So been through the ups and downs. We are living in a new time right now, as you guys all know, with the NAR settlement. That's what everyone's been talking about with the new buyer broker agreement, and this whole thing about if the seller won't pay, the buyer has to. It's nothing really new though. These buyer broker agreements have been around forever. Just now we're all going to be required to use them. And one of the challenges we're facing, I'm up here in Central Florida. I live in Winter Garden, and I do a lot of work in my surrounding counties. And I do a lot of work with first-time home buyers. And what we find is that many first-time home buyers, maybe they've got enough money saved up for their down payment, but they don't have the money for their closing costs. And then you tack on a realtor commission on top of that, that could drain everything they have, or maybe even put them in a position to not be able to buy the house they want. So we've gotten creative with it. We found a few different ways to deal with it. So I kind of want to talk through that a little bit with you guys today. I've also got another product I wanted to bring to your attention that we've been utilizing up here, and we're having some great success with it. So with that, let me go ahead and change my share to that and tell me if that worked. Yep. Okay. So again, we're Total Lending Concepts. Our tagline is home loans with a little TLC. It's cheesy and corny, but it's fun and it's true. We take a little bit extra care with our clients, put that personal touch on it to make sure everybody has a good experience. Creative financing. Our agenda here today is, as I said, assisting buyers, agents, and incorporating their commissions into the loan. All right. We have strategies also for growing your investor portfolio through equity utilization, and then how that partnering with TLC can help you with unlocking these opportunities. So with the need to address the agent's commission and make sure that you guys get paid, the seller gets what they want, the listing agent gets what they want, and the buyer gets what they want. Well, we have to really take a conscientious approach to this. So the first step, of course, is getting your buyer pre-approved. I mean, that's number one. That goes without saying. But once your buyer's pre-approved and you're out shopping with that buyer, we ask that you tour the home. Get in there, see the place, see its ins and outs, get a feel for the condition of it. Why do we want you to do that? We want you to do that because pictures lie. We all know pictures lie. Some of these photographers can take photos of these homes and make them look a lot better than they actually are. So we want you to put feet on the ground. We want you to be able to see the upgrades and get a real feel for the home, because once you've toured the home and realized that, yes, this is a home my buyer really likes, we then ask that the realtor goes and does their own, basically a CMA. Run some comps, figure out what you think the house is truly worth or what it may appraise for. Why do we want to do that? Let's say the seller's asking $500,000 for the home. And you as the realtor have negotiated a 2% realtor fee. But that $500,000 purchase, they will not give that 2% concession to the buyer's agent for their compensation. So what we would look to do would be to present a price for that home that would leave room to be able to incorporate your 2% or 3% commission that you're charging to your buyer for representing them. If you feel the home is going to appraise high enough, we may even be able to go higher and build in some closing cost concessions to help the buyer with their closing costs. So again, this isn't really something new per se that we haven't done in the past with structuring deals, because we've done that with trying to build in closing costs previously. But if the seller's willing to take, let's say the seller's willing to take $480 on a $500,000 home, but you do your research and realize that the place would probably appraise for $510, well, then we develop an offer of $510 asking for that $30,000 back in the form of different ways of concessions to both cover the buyer's costs for their closing and prepaids, plus their cost to you for representing them. Then once we've figured that out, we as the loan officer would then take that new purchase price and we'd run numbers on that property. Now here at TLC, when we run an offer for run numbers on a property, we don't just kind of make up fictitious numbers. We'll pull the tax bill, we'll calculate what those taxes are right now. We'll even go as far as getting a homeowner's insurance quote from a reliable insurance agent, so that when we quote that buyer a payment, we're pretty much close to the final dollar amount that buyer is going to be looking at on a monthly payment. We do run title quotes. We run a generic title quote just because we don't know which title company is going to be used for that specific transaction. but we do try to be, like I said, very conscientious in our approach to give that buyer a feel of how much they're going to need to bring to the closing table and how much that house is going to cost them on a monthly basis. And once that conversation happens, assuming that the buyer is okay with it and they're happy with it, or we have to make tweaks to it, whatever the case may be, at that point, then we present the offer to the listing agent. And hopefully we've done our jobs right and we win the deal. Any questions on that? Okay. So the next piece we want to talk about is our equity utilization program. Okay. We have access to a program that's through a second mortgage product that will allow your homeowner to tap into the equity that they have in their home and utilize that equity to be able to do with as they please. Why is this important? Because with interest rates having been so low the last few years, 21, 22, there's a lot of people that are trapped in these homes and in these mortgages at these very low interest rates that refinancing that home to tap into the equity in that home does not make sense. They'd be giving up a fantastic interest rate on their first mortgage to get the access to that extra equity. So how do they get a hold of that money? They either have to sell the house or they have to take a second mortgage on it. Well, most of your second mortgage products will only lend on a primary residence or a secondary residence, meaning they're going to live in the home at some point. They don't rent the property out. So investors are kind of left holding the bag. Typically investor loans, if you can find a company that will do a second mortgage on an investor loan, you're talking double-digit interest rates. With this company that we work with, Deep Haven, they are allowing us to go up as high as 70% of the value of the home on an investment property to give that money back to our investor to be able to use that money as they please. And the approach to this is if you have somebody that has investment, we can tap into that equity, get that extra money and use that to purchase another property and expand your portfolio. Some really cool things about their guidelines as opposed to some other companies is they only require 1 year information for income. They only require a 680 minimum credit score. They do want you to be on time on your mortgage for the last 2 years. They will also go as far as to use bank statements to qualify, which is what's known as a non-QM product. Your traditional mortgage, when you're qualifying, you have to present tax returns, pay stubs, things of that nature. Whereas with this product, we can actually take our self-employed business owners and present their bank statements and use the average deposits in their bank statements. So that's a really great feature with it. And the other big piece is that they'll allow us to go up as high as 50% on the debt to income ratio, where most of these companies cap you at either 43 or 45%. So this is a very strong product. We're using it with great success here. I've got multiple clients that I put them together to pull the money out of their home they have, and they're under contract to purchase their new home. We're closing the second mortgage. If it's a refinance on their primary residence, we're closing it and then it's going to fund 3 days later because of the right of rescission. So we're closing on their purchase 4 days later. So that way they're not using any of their money. They're keeping their money in the bank, keeping their money in their investments, and they're utilizing the equity in the homes they already have, putting that money to work for them. But
Ryan,
yes.
I'm sorry, Ryan, what was the interest rate on this?
This one, as low as 8.625. The highest I've seen so far is 9.25. So like I said, when it goes to second mortgages, it's really a competitive rate, especially considering that right now prime rate is at 8.5 still, and most of your lines of credit are going prime plus. So many of your lines of credit are going to be 9.5% or higher. So, and again, they'll do this on investment properties where your lines of credit, you can't do that on an investment property.
And just a comment that I want to make here is that this is also a great form of creative financing, because if you're working with a buyer or an investor, not only can you find funds to get your compensated for being the buyer's agent in this way, but also it opens the door of a person that was not didn't have enough cash flow if you just ask and, the simple question of, do you have any equity on any of the properties, or do you, in the house that you're living in? And sometimes people are, like Ryan said, they're like, but I don't want to touch that because I have a great rate and I'm sitting at 2%, I'm sitting at 3% when I refinance. So I want to leave that and I want to get some rental income from that property, or whatever the answer may be, but in this case, you can offer a second mortgage on just the portion, on this, they can keep the lower rate on the portion of the mortgage they have. And then just on the equity, they can have, this, it's a higher rate, but it's way lower than an equity line of credit. So it's also a really nice way to make this happen for your buyers, and of course, get compensated for it.
And to piggyback off of what you're saying there, Angela, is with, and I'm throwing numbers around, but the truth is, when we have people that are sitting at 3.5, 3.75, even 4%, and a cash out refinance right now, if they're paying points, they're going to end up in the high fives. So rather than taking, let's say you owe $300,000 on your mortgage, right? And you're at a 3.5% on that $300,000 mortgage, and you want to go tap into $100,000 in equity on your home. Well, why give up that 3.5% to take an almost 6% interest rate to access that extra 100K when you could put just that piece on this higher interest rate, and then use that money, like Angela's is saying, for down payment on the new house, for realtor comp on the new house. Let's say they're buying an investment property that maybe there's some updates they're going to want to make. There's some things they're going to need to do to it once they move into it, or once they get their hands on it. This money, there's no restriction on what they do with the money, which is fantastic. So I love this product. I love this program, and I've been pushing it very hard. And then, of course, when interest rates do come back down, because they eventually will, we can always look at combining the two mortgages together if it makes sense at a lower interest rate. So let's talk a couple scenarios. All right, so scenario number one, okay, we have customer Ava and Patrick. They recently welcomed their second child. They're now seeking a larger home. While Patrick has a stable income, they had to use most of their savings to cover the expenses related to the new birth. So at this point, they can come up with the 3% down for the new home, but they don't have the money to cover the closing costs and buyer's agent commissions. Well, this ties right into what I was talking about earlier. We could either look at utilizing a down payment assistance program, because there's multiple ones out there. We do have a down payment assistance program that's nationwide, that does not require the buyer to be a first-time home buyer. We have the ability to use seller concessions to free up more down payment money. We have the ability, like I said, we would run a CMA, establishing the max value of that property. So, and again, I go back to saying, let's assume that they're asking, $400,000 or $500,000 for the home, but we come to realize that the home is probably worth more than that. As long as our buyer is comfortable with the payment and our buyer is comfortable paying that, that's a creative way to finance in our closing costs, our prepaids, and our agent's commissions. We can't finance in the down payment. That's the only piece we can't finance in. But we can use a down payment assistance program to cover that down payment piece. And if we've structured it correctly, we could put a loan together where the buyer comes to the table with nothing but their earnest money. We've done that multiple times. But again, these are ways that, and then there's another way would be to price the loan with a high enough interest rate that we can provide lender credits to lessen the cost. Because there's a happy medium there, right? You're not always going to get the seller to give you all the money you need to cover the deal. The buyer is not always going to be willing to take that high loan amount and that high payment. So we've got to get creative. So there's multiple ways that we can approach this to help that person's 3% down payment money go to work for them. And in many cases, they can keep the home that they were living in, turn that into a rental property, and start building their portfolio and buy this new home as a primary residence. And we can use the rental income on that departing residence in order to offset that mortgage and help their debt to income ratio. So that's another creative way that we can do that. Scenario two, would be, there's a real estate investor, they want to purchase a 4-unit property, but they're short on cash flow. So again, there's a lot of different ways we can approach this. What other properties do they have? We can use that equity advantage loan on as many properties as they have. There's not a limit, as long as we can qualify them for it on the debt to income ratio. Again, 50% is our maximum debt to income ratio on that equity advantage product. And then we could buy this new property, use the rental income that the new property is expected to produce, and help that to offset the new mortgage payment. We could even go as far as doing what's called the DSCR loan, which we've spoken about in previous meetings, the debt service coverage ratio, where we only look at the rental income that the new property is going to produce in order to cover that mortgage. Now, what's really cool about the debt service coverage ratio program that we have, our investor recently made a change, and they will now allow 6% seller concessions on an investment property using DSCR. That's a huge change from what your standard conventional mortgages are. Your standard Fannie and Freddie cap us at 2%. 2% is the maximum seller concessions. With our investor Deep Haven, we can go DSCR and we can get up to 6% back from the seller. Why does that matter? Because that's how we get you paid. That's how we get their closing costs covered.
Great.
Any questions on those?
Not so far.
Hometown Heroes.
Yes.
Okay. So unfortunately, Hometown Heroes is exhausted. That program is out of money. We do still have the Florida Bond Program, which is a nationwide or statewide program that offers $10,000 in assistance. We also have the TBA Plus program, which I don't know if you guys have ever been exposed to that, but the TBA Plus currently is giving anywhere from 3% to 5% in down payment assistance on a Freddie Mac loan, which is a conventional mortgage, and it's forgiven after 5 years. And the rates on that have come down recently. It's still not, I mean, it's not regular market rates. You're probably looking at anywhere from 7.125 to 80%, depending on how much assistance you take from them. But that money will be forgiven after 5 years. Whereas Hometown Heroes and Florida Bond, they carry lower interest rates, but you have to eventually pay that money back. But good question.
They're asking TBA, Brian, like what does TBA stand for, or what is this TBA?
Yes. Let me pull up. I can never officially remember the acronym. Hold on a second. Let me do this.
But again, this is very similar. Remember the Hometown Heroes, it was up to 5%.
Mhm.
And this is also very right on that.
Yes, minimum credit score is 640. Of course, if you're going to go down to 640 on the credit, you're
Higher
going to
rate.
want you're going to want to be a nice low debt to income ratio. So I would try and keep them, be looking over 680 if we could, if we're doing a conventional.
And that's another thing that we are great in the team. Ryan has guided us to help people. He's an expert just looking at the credit reports, and if it's at 640 or 630, exactly what we need to do to bring it up to 680 in 30 days. I mean, it's amazing what I've seen in the office that Ryan can do and guide us to do with our clients. Like I had a scenario where I was sitting at 650, I believe. And we got a collection completely deleted from the credit report, and it went up to 750, 100 basis points in less than 30 days. That happened with one of my clients. So it is amazing. If you are thinking of some clients that don't qualify because of credit, let us know, please.
And I apologize. TBA stands for the bond alternative.
The bond alternative. Mhm.
Yes. My apologies. I just put a link to that guideline. All of the information that I'm talking about with Florida Housing, the statewide programs, is all publicly available through eHousing Plus. So I put the link in the chat, and that'll take you to the statewide programs. You'll notice, and I'm going to share that screen for just a second. I don't want to get deep into it because I know that it can get confusing because of the amount of information. But basically, when you're there, I mean, it's got all the different, so you got the standard bond, which gives the 10,000. It shows you the daily rates on it. The 2 different TBAs. I wouldn't do the standard TBA. I would do the plus TBA if we were going to do one of those, just because the money is forgivable. And again, it's upwards of 5% down payment assistance, where the standard bond loan gives you $10,000 in assistance. But then everything you never wanted to know about the program is at your fingertips. And that's using the link that I sent you for the Florida Housing.
And again, this is part of the creative financing that we were just talking about, because it will give us extra funds to work with. So it's important to know that not everybody, a lot of people tell you that they know how to work these programs and they're stuck with them once they start, or even if you tell them, hey, I've heard about this program. The difference with Total Lending Concepts is like, we are experts, hometown heroes, TBA, you name it. One of the things we're really proud of is we've helped so many first-time home buyers, and even not first-time home buyers. If I'm not mistaken, I think Ryan said you don't have to be a first-time home buyer to have this assistance. So that's another thing that makes it great.
Yeah, for some of these programs, you don't have to be a first-time home buyer. With the state programs, veterans are exempt from being first-time home buyers, and if you're purchasing a property in a targeted area, which they designate what the targeted areas on through their site. But the question is, what defines a first-time home buyer? A first-time home buyer is somebody who has not had ownership in a primary residence within the past 3 years. So just because they own a home does not make them a non-first-time home buyer. If they've lived in a place that they're renting, or they're not paying rent, but they have no ownership for the past 3 years, they are considered a first-time home buyer. So I always use the example of the person that moved down from New York. They kept their property in New York. They're renting their property in New York. They're living here in Florida. They've been living here for 3 years. They're a first-time home buyer again, even though they still own that property up in New York. So that's pretty big. So again, I've got a ton of different programs that we have access to. We are trying to be experts on these programs. I'm constantly in these guidelines, reading these guidelines, figuring out ways to make loans work and apply to these changes in the market. So I'm a tool for Angela's to use. I've always got her back, and that's the big thing. You know, when you come to TLC, you get us. You get a whole team of people kind of trying to mastermind this thing to figure out the best way to get your client home in a way they're going to be comfortable. We maximize every opportunity. All right. I get described as a dog with a bone. I don't let it go. And so we figure out ways to make these things work, where other agents may have a hard time getting the job done. People bring us their deals and we get them figured out. We've got a multitude of down payment assistance programs all across the state. A lot of your local SHIP programs up here in Central Florida, all the way down into Highlands County. We do educational workshops and counseling. We're always working with buyers to try and help them improve. Many times we'll get your buyer pre-approved so they can get out and start shopping. But while they're out shopping, we're working with them to improve their credit, improve their finances, so that they can easily qualify for either more home or get a better interest rate and better payment on the home that they're going after. And those are the things that make us stand out, which in turn will help you stand out. And that was my piece for today. So please, I open up the floor. Any questions, comments, any scenarios that anybody wants to talk about that we can try and help with?
Angeles, I do think it's important, if you can, since you're bilingual, to explain in Spanish what would be the creative financing for those who do not have the money to pay the commission, in this case, buyers. You know, like if you're a first-time buyer and you only have like money for an FHA with 3% or a conventional with 5%, what's the creative way to do so? You know, as far as Ryan said, the only way to do so is asking for, you know, the down payment assistance program plus the seller concessions plus boosting the price, the highest that we can do. So, you know, that commission can be incorporated in the loan. So if you don't mind going through the whole process in Spanish, that would be great.
Absolutely.
So
And Ryan,
can
if
do
you don't
that as
mind,
well.
just can we go back to that screen where the
Scenario one,
steps?
right?
I think it was the second, well, mainly, of course,
Yeah,
thank you so
that's
much.
the one. I
Oh, no,
think it's
no.
the scenario one. Scenario one is the one that, you know, we're more interested in, because that's the
Uh-huh.
scenario where most people are. They
Yep.
don't have a home, so that means that they cannot pull any equity from anywhere. You know,
Right.
it's like I have the money for a 3% loan or a 5% loan, and you know, where am I going to get the money to pay the compensation to the buyer if the seller is not willing to pay? That's the whole scenario right now. That's what we're facing. What if the seller doesn't want to pay? What do we do?
Absolutely. Claro que sí, Cristina. Para las personas que se les facilita un poco más de entender en español, con muchísimo gusto, tenemos este escenario uno, lo que sucede, ¿no? En los first time home buyers, o incluso lo que había dicho Ryan, si es que no es un first time home buyer, pero tiene fondos limitados para el down payment, o por ahí, en este escenario, por ejemplo, esta pareja, dijimos que acaban de tener su segundo hijo, han estado alquilando y están listos para dar el paso para comprar su casa. Claro, tuvieron gastos en este nacimiento de este segundo hijo y tienen lo justo para el down payment, pero no tienen para cubrir costos de cierre y mucho menos para pagar una comisión al buyer's agent. Entonces, qué es lo que estamos nosotros tratando de buscar de una forma creativa? Hay diferentes, y lo más fuerte que les puedo decir que tenemos acceso en este momento son programas de asistencia, a Down Payment Assistant, donde en este caso tenemos hasta 6% que podemos trabajar con esos fondos, perdón, hasta el 5% que podemos trabajar con estos fondos, tanto para ver qué parte, si es que digamos de este 5% necesitamos 3% de down payment. Como ustedes saben, los dueños aún van a tener esa apertura. La mayoría de dueños van a tener apertura de también pagar la comisión del buyer's agent. Quería hacer ese paréntesis porque las personas que están tratando de vender saben que ustedes van a traer el cliente, pero sí vamos a encontrarnos en el mercado con una o que otra transacción que el dueño diga, no voy a pagar ni un centavo al buyer's agent. Entonces, en ese caso, nosotros tenemos la facilidad de buscar un programa de asistencia donde si nos dé el 3 o el 5%, donde más nos dé ver qué necesita el cliente. O que si el cliente necesita, este es un first time home buyer o es una persona que va a utilizar, va a necesitar el 3% para enganche, nos queda un 2% para Buyer's Agents Commission, en este caso del 5%. Entonces, ustedes ahí, al presentarnos nosotros, que les explicábamos en la parte número 1, es un trabajo en equipo, como para poder yo precalificar al cliente y de saber cuál es la situación del cliente y ver en las casas que vamos viendo si es que sale un escenario de decir, ok, le encantó esta casa. Entonces, bueno, el paso número 1 es ver la casa, no solo las fotos de que el cliente les diga, miren, me gustó estas fotos y ya pasarnos a nosotros del escenario. No es suficiente porque puede que da el primer paso en la casa y no le gustó, la foto era diferente. Entonces, lo que les pedimos es que hayan visitado la casa y que les gustó la casa al cliente y de ese momento se contacten con nosotros para hacer esta precalificación al cliente y ver primerito si es que son, cuál es su ingreso, cuál es su escenario para ver si es que ellos pueden acceder a un Down Payment Assistant. Con eso ya tenemos una puerta abierta de dónde vamos a sacar si es que necesitamos Down Payment o si es que necesitamos pagar el Agent's Commission. El paso número 2 que estamos aquí revisando, el numeral o la letra B, importantísimo, hacer un CMA, Comparative Market Analysis, en esta propiedad que visitaron y que le gustó al cliente. porque también tenemos la posibilidad de ser creativos y ver cómo presentamos la oferta, cosa que ustedes ya son expertos, porque ya hemos hecho en el pasado donde le subimos a la oferta de lo que estaban pidiendo para tener unos fondos extras para usarlos, ya sea para seller concession, perdón, para closing costs, costos de cierre, o en este caso también para la compensación del buyer's agent. Entonces, esa es otra forma de nosotros ver si es que no aplican para el down payment assistance. Ok, vamos a plan B, hagamos sepamos de exactamente cuál sería, o lo más preciso posible, cuál sería el precio máximo de que esta propiedad aprecia, para de esa forma nosotros estructurar la oferta para que esta oferta pueda cubrir ya sea comisión, costos de cierre. Entonces, eso, y la última parte era lender credit, un momentito, between pricing the loan to provide lender credit and offer enough cover closing costs, the agent's commissions. Exacto, entonces como les había dicho, entre lo uno y lo otro, o sea, hay estas dos posibilidades de ver cómo trabajamos en equipo, y como les había dicho Ryan, nosotros no solamente vamos a hacer en una llamada, sí, ¿sabes qué? Califica y el pago le sale más o menos. Nos tomamos el tiempo, o sea, si es que ustedes me dicen, Ángeles, hemos visto esta propiedad, les gustó, sacamos los tax records, vemos, hacemos una llamada al homeowners insurance a diferentes personas que trabajamos en el día a día, para que nos den los datos, los estimados más cercanos y reales en el pago, en el posible pago, para ver si realmente el cliente califica. Y una vez que tenemos todo esto hecho, nos comunicamos con ustedes, les dejamos saber, miren, el cliente sí califica, tenemos este crédito, tenemos esta posibilidad de down payment assistance con este cliente. O en su defecto, no tuvimos la posibilidad de down payment assistance porque el crédito de esta persona no está en un mínimo de 640. Pero tenemos la posibilidad de que me puedes ayudar con un CMA para ver hasta dónde podemos subirnos en cuanto al precio de la casa. Entonces, siempre podemos hacer un trabajo en equipo y sacar el mejor provecho. Y por último, a pesar de que Cristina nos dijo que es más difícil, pero también tenemos la posibilidad de preguntarle al cliente si es que son dueños de alguna casa. Como dijo Ryan en un ejemplo, hay personas que se mudan de otros estados, dejaron su casa alquilada en algún otro sitio, o ya sea en la misma Florida, pero tienen una casa que alquilan y están comprando otra casa. Esa es otra forma creativa. Si es que, bueno, si el plan A y el plan B no funcionaron, plan C, ¿tienen alguna propiedad que tenga equity? Entonces, de esa forma, si es que fuera, sé que no mucha gente va a hacer la respuesta que sí, pero por ahí no nos imaginamos, y por no hacer esa pregunta, nos perdemos de ese buyer. Entonces, es súper importante saber si es que, bueno, plan A, plan B no funcionó con este cliente. Preguntemos de este cliente, ¿tienen alguna casa que son dueños en algún otro estado o aquí mismo en la Florida que estén alquilando? ¿Tiene esa casa algo de equity que podamos nosotros sacar? Entonces, generalmente las personas, sí, pero yo no quiero tocar esa casa porque esa casa tiene un mortgage y ese mortgage tiene un súper buen interés. Entonces, yo estoy cómodo con que esa casa no toquemos ni quiero refinanciar. Entonces, la respuesta sería, perfecto, entendemos muy bien. Lo que podemos hacer con ese equity es lo que podemos hacer con esa casa es dejar el mortgage que tienen con el interés bajo y ver en esa porción, por ejemplo, 50, 80, $100,000 que ya ha apreciado la casa y tienen como equity, sacamos un second mortgage o una segunda hipoteca en esa propiedad. Si el cliente tiene excelente crédito, estoy hablando de 750 para arriba, va a conseguir un interés mejor y superior al de las líneas de crédito. Más o menos ahorita hemos visto con un par de clientes de entre el 8.75 o 9, que es mucho mejor. Yo he visto líneas de crédito del 11, del 12. Obviamente, eso depende siempre del crédito del cliente, si es que tiene un excelente puntaje de crédito. Ahora, si el puntaje de crédito no, aquí creo que estaba en el programa, el mínimo es 680. Con 680 no va a conseguir el mejor interés. Sí va a conseguir el préstamo, pero no el mejor interés. Entonces, es del crédito mínimo. Entonces, para resumir, sí hay posibilidades y hay formas de trabajar en equipo donde se le puede explicar de una forma muy simple al comprador de que hay formas de que suceda esta transacción. Y como ustedes se darán cuenta, de igual forma podemos tener esta conversación si es que ustedes están teniendo dificultad de que, ok, ¿qué tal que que los dueños de casa no quieran pagar la comisión? Y quieren que nosotros de una u otra manera precalifiquemos al cliente para ver si es que antes de empezar a enseñar casas, antes de saber ni siquiera si es que los dueños están o no dispuestos a pagar comisión del buyer's agent, revisemos y vemos si este cliente califica para un down payment assistance. Yo creo que sería el primer paso. ¿Alguna pregunta que tengan de aquí, de lo que hemos compartido hoy, tanto en inglés o en español?
No sé si es que alguno de los brokers que está aquí también participando tiene algún comentario que quiera hacer también con sus agentes.
Buenos
Ya que-
días.
Sí, buenos días.
Gracias, Cristina, por traer este tipo de clase. Ángeles, una preguntita.
Aida, claro,
A la hora del closing, ¿no? En el
sí,
closing disclosure aparecerá lo que es la parte de la compensación hacia el realtor, ¿correcto?
correcto.
O sea, el lender aprobará de que X cantidad de dinero, 10,000 o 8,000, lo que sea, va a ser payable al buyer's agent.
Correcto, correcto. Solamente voy a traducir en inglés para que Ryan me dé el 100%, pero sí, eso es correcto. Va a salir lender paid commission en el closing disclosure. Ryan, just to make sure that I am responding correctly, Ida is asking me if in the closing disclosure, if they use a down payment assistant and the lender is paying the buyer's commission, does it appear in the closing disclosure as lender paid buyer agent commission?
I'm glad you asked that question. So if we're using on the down payment assistance, those funds are not allowed to be given to the agent. We need to use seller concessions or lender credits to cover that. That's why the whole point of the CMA and constructing an offer that allows us to be able to build in the agent's commission into the purchase price.
Okay, so
So
the answer would,
we're typically going to use seller concessions to pay the agent's commission.
in the closing disclosure.
Correct.
So the down payment assistance will not show, it does not let us use in the closing disclosure.
The
you
down
cannot
payment,
see
the down
that
payment
we're using those
assistance,
funds.
right? The down payment assistance is allowed to be applied to the down payment,
And
and
closing costs.
closing costs and prepaids. It can't be used to pay agent commissions. They haven't opened it up to be able to do that yet. I don't think we're far enough along after the NAR settlement for them to come to
So
the-
how would you explain that to a seller? Let's say, the seller, we do this creative financing to make
Right.
sure that the agent gets paid. And at closing, you have a seller saying, I never agreed to pay this from the seller concession.
That's why the
How-
seller is going to know at the time of presentation of the contract. We're going to give you. You're asking 500,000 for this house. We're going to give you $520,000, and we need 20,000 back. And here's how that money is going to disperse.
Okay, got it.
Absolutely.
Entonces, Aida, para responder su pregunta, me dice Ryan que no tenemos, que los programas de down payment hasta el momento no nos han dado la luz verde o el permiso de utilizar los fondos que ellos dan para pagar comisiones del buyer's agent. Entonces, como lo hacemos es este creative financing, le pedimos al seller o al dueño de casa que vamos a darle un sobreprecio. O sea, si ellos piden $500,000, nosotros decimos 520,000, por ejemplo, y que vamos a utilizar ese dinero para pagar costos de cierre, buyer's commissions, etcétera, pero que no sale de su original asking price, o sea, de su precio que estaba pidiendo originalmente. Es como lo estructuramos para los dueños en el momento. Estamos esperando, y yo sé que como hay este gran cambio en la industria, tenemos las expectativas que los bancos, Freddie Mac, Fannie Mae, hagan el cambio y nos permitan utilizar los concessions que ellos nos dan para buyer's agents. Y eso se ha especulado y es algo que parece que en la industria van a haber apertura por lo que hubo este cambio reciente, pero hasta el momento no nos permiten mostrar en el closing disclosure de la forma que ustedes nos dicen. También para agregar, lender credits también se puede manejar esto como un crédito del lender. Entonces, si es que, por ejemplo, nosotros estamos utilizando down payment assistance, se puede comprar puntos. Entonces, con este down payment assistance como parte de los closing costs, a pesar de que algunos programas de down payment no nos dejan comprar puntos y tuviéramos que ahí darle la vuelta y utilizar creativamente los fondos del dueño. Puede ser un poquito confuso, por eso les pido, traigan los escenarios para nosotros estructurarlo de la mejor forma donde sabemos cómo podemos presentarlo a los bancos y al seller. Entonces, antes de presentar una oferta, nosotros ya discutimos estos temas cliente por cliente, viendo si es que aplican para un down payment assistance, viendo si este down payment assistance nos permite pagar algo de puntos, para con esos puntos nosotros darle un lender credit o un crédito del lender o del banco al cliente o para pagar la comisión del agente. Entonces sabemos que en este momento como que no tengo la respuesta precisa y exacta porque es un uno a uno el escenario, como vayamos viendo, cada persona es un universo y ver cómo logramos, pero lo que sí les puedo garantizar es que sí se está logrando y sí se están cerrando todos los días, todos los meses, transacciones donde trabajamos creativamente con los agents para que sus comisiones sean pagadas satisfactoriamente.
So Angela, there was a question put into the chat by Maria.
Okay, ¿es there,
Oh,
alguna
and I-
estrategia para los condos cuando el buyer no tiene el 25 para dar un down payment? Any strategies for the condos when the buyer doesn't have the 25% for
Okay.
down payment plus closing cost?
Right, so I've got to make a couple of assumptions in this question. The first assumption I'm going to make is that we're talking about a non-warrantable condo, because a warrantable condo does not require 25% down.
That's correct, Ryan.
Okay,
That's the
second
case.
piece,
Mhm.
we do have a non-QM product that will allow them on a primary residence to go and even investment property to go 20% down on a non-warrantable condo. So that gives us 5% to work with. And again, closing costs, prepaids, the seller concession is up to 6% on that program. So we can design an offer. We can do as low as 20% down. I can't do anything about the 20% down. That's the only piece I can't cover. I can't figure out for you, but I can get you with 6% in seller concessions. I can get you closing costs and realtor commissions covered through that.
Para responder y traducir eso, lo que nos acaba de decir Ryan con respecto a esta pregunta, ¿es alguna estrategia para los condos cuando el buyer no tiene el 25%? Tenemos un programa que nos permite hasta el 20%. Tenemos un extra de 5% ahí que sería menos, ¿no? El 5% menos de lo que generalmente están ofreciendo. Y en este programa, precisamente, la mayoría es del 3%. Nosotros podemos ir hasta el 6% de seller concessions. Entonces, pudiéramos agregar un poco en el precio, ver en el CMA, trabajar con ustedes la oferta y ver. Pero generalmente con ese 6% se cubre closing costs y podemos también cubrir buyer's commission.
And something else to put out there too, Angela's, is we've had 2 loans in the past 60 days that have been brought to us that other companies have said that they were non-warrantable condos. And with some simple research, we found out that those condos were already Fannie or Freddie approved. And we were able to do those loans under normal financing.
Thank you so much. También es importante como algunos loan officers o algunos lenders todavía no tienen gran experiencia en condominios. Como les comento, nosotros trabajamos todos los lunes y martes, tenemos meetings donde presentamos el escenario y estamos 6 o 7 cabezas. Todos los lunes y todos los martes nos reunimos por 2 horas, 2 horas y media presentando los escenarios de nuestros clientes. Y lo que decía Ryan, en los últimos 60 días hemos salvado 2 préstamos que otros lenders dijeron que no podían hacerlo porque eran no warrantable condos o condos no garantizados o no garantizables y que no podían hacer nada al respecto. Con un poco de research, con un poco de investigación, nosotros nos dimos cuenta que estos condos ya habían estado aprobados por Freddie y por Fannie y se utilizó el financiamiento que que no le habían dado en otros préstamos. No es solamente una cabeza pensando, eso es lo lindo de este equipo, es que yo estoy aquí presentándoles en español, tengo a Ryan atrás mío, que es el manager, es la mastermind, es un hombre extremadamente sabio en lo que es el mundo y los préstamos. Nos ha dado soluciones que no se pueden imaginar. Hemos subido los scores en 30 días hasta 100 puntos. O sea, me siento súper orgullosa porque no somos una persona que te diga sí, si califica o no califica. Yo llevo cada escenario los lunes y los martes a ver que 7 cabezas pensemos qué podemos hacer con este cliente. Entonces, eso es lo que hace la diferencia en este equipo.
Yes, so as far as
Uh,
recertifying Ida, I have not done a recertification yet. Not saying that it can't be done. I'd be up for the challenge on that. And then there's a question from someone that says about single unit approvals. And yes, absolutely, FHA. We do single unit approvals on those through FHA. You can't do it all the time because they have a limit to how many FHA loans can be in the community. But again, that's something that we are doing. I've got a loan just got approved today that I just did a single unit approval on. So yes.
I have a question. Do you handle commercial loans?
We do have a commercial structure through Angela's has a partnership with another company, Cornerstone, that she could speak to on that. But yes.
Okay.
Sí, Carmen, con mucho gusto. Sí tenemos una alianza que Cornerstone Capital, que dimos en el Launch and Learn, ellos son aliados y también partners del club que nos pueden ofrecer préstamos comerciales y diferentes escenarios, incluso para investors en single family residence, que a veces eso se dificulta que por ahí den estos préstamos. Siempre quieren que sean multifamily, están buscando 2 o más unidades como mínimo. Hemos logrado aprobaciones en commercial cuando ha habido un builder o un investor que está usando un builder y este builder le va a hacer una casa de inversión y es un single family residence. Incluso en esos escenarios hemos logrado por medio de Cornerstone.
You know, something I just thought about, Angela's, Carmen, something to add to that. When you're talking about commercial, if it's a business purpose loan, like a debt service coverage ratio, to purchase like a rental property, that's something we can do. But if you're trying to do a true commercial space, that would be something we would prefer you over to Cornerstone on.
Yes, I need a commercial space, retail
Gotcha.
space and land, and even construction loans.
Yep, Cornerstone's your guys for that stuff. They're really good at that. They've been doing it for a good long time. And then the other thing I was going to mention to you that I did not bring up on that equity advantage loan, the property can be in an LLC. So if they own an investment property that they have it in an LLC, we can do that second mortgage on that property without them taking it out of the LLC.
Okay.
So that's another big piece that a lot of these second mortgage companies are making you do.
Thank you.
And I hope I clarified Myra's question. She asked if we do foreign loans, and I just want to be clear. We do offer foreign national loans. We do loans in the United States. So I can't help somebody buy a house somewhere outside of the country, but we can absolutely, foreign national purchasing a home here in the States, we absolutely have programs for that. We've done a few of those through Angela's already.
Ujú. Sí, Mayra, la respuesta es sí, definitivamente podemos hacer foreign national loans. El detalle es que no para comprar propiedades fuera de los Estados Unidos. Pueden ser extranjeros comprando propiedades dentro de los Estados Unidos. Y también podemos hacer en propiedades comerciales por medio de Cornerstone, si es que quieren comprar incluso business loans, si es quieren comprar un negocio, si quieren comprar o land o una gas station o lo que fuera en comercial y en residencial también. Perfecto, yo te mando, Mayra, los requisitos.
Excelente. Tal vez alguna otra pregunta. Estamos a 5 minutos de que se termine nuestra clase. Gracias a los que se unieron el día de hoy. Tenemos mucha gente en esta clase de The Club. Tal vez hay muchos que no son miembros de The Club. Pronto les dejaremos saber los nuevos avances de cómo va nuestro club y el website. que tiene excelentes noticias. Hemos ido ajustando el website para que sea conforme a los nuevos cambios de la NAR. No sé si es que tengan alguna pregunta, comentario de los que están aquí presentes. Any questions? Any of you who are here? Thank you for joining us. Nada so far?
Either we've
Thank
done a
you.
great
Just wanted
job
to-
of explaining everything or we've done a great job of confusing everyone.
Thank you, Ryan.
You know,
That's
Maybe
what
a
I
little
was
bit of
gonna
both.
say.
this
Thank you
is-
for
this
the
is
teamwork.
Miami. You know how it is, Miami, we're like fully bilingual, we have to do in Spanglish. But anyhow, before we leave, antes de desconectarnos, les quiero decir a nuestros miembros del próximo miércoles a las 10 de la mañana tenemos una clase súper interesante de algo que también está pasando mucho, que es que muchas propiedades no se pueden asegurar. O sea, ¿qué es lo que causa los 10 motivos por los cuales no se puede asegurar una casa? The 10, ¿cómo fue que le pusimos el nombre? The Top 10 Insurance Deal Killers. Así que eso va a estar una clase muy interesante, es un excelente conocimiento, distinto al conocimiento que tenemos ya con expertos. Y lógicamente, ya que estamos con estos problemas de seguros, también vamos a tener la siguiente clase, un experto en seguros que nos va a explicar todo eso. Así que no se pierdan, saben que las clases son todos los miércoles a las 10 de la mañana usando el mismo enlace. Así que los que no son parte del club, que se unieron por otras redes y no tienen acceso al chat del club, pueden usar sin ningún problema este link. Y si es que no son parte del club y les interesa ser parte de nuestro club, solamente tienen que mandarnos un mensaje aquí por este medio o por WhatsApp al 305-219-3476. Algo más, chicos, y si no, pues estamos listos. Simplemente agradecer a Ryan y a Angela. Thank you so much. It has been a wonderful class. Like always, we look forward to seeing you soon.
Gracias, Cris. Sí, yo quería agradecerles también. Y sé que estos métodos que enseñamos posiblemente son cosas que ustedes han hecho en el pasado, excepto por trabajar en equipo para ver cómo le damos la vuelta y cómo sacamos de esos fondos y cómo presentamos a los bancos para que ustedes tengan esta facilidad de recibir su comisión y que sea más fácil lidiar con este tema de buyer's commissions. Así que cuentan con nosotros, estamos aquí siempre. Como les digo, Ryan es una persona que vale la pena aprovechar
Así es.
todo el conocimiento que tiene y pues él está respaldándome 100% todos los días, así que aproveche.
Bueno, muchas gracias, chicos. Nos vemos entonces el próximo miércoles. Que tengan
Thank
una
you so
linda
much.
semana.
Thank
Bye
you
bye.
guys. Thanks for having
Thank
us.
you, Ryan. Thank you,
Thank
Chris. Thank you,
you.
everybody. Take care.
Bye-bye.
Bye-bye.